Exercise 1710 determines pension expense from the given information. Number 1, how much is the pension expense during the year? Pension expense includes service cost of the year, interest cost of the year, and amortized prior service costs. But here they tell us there are no prior service costs, so we don't need to include amortized prior service costs in the pension expense. We will also include net gain or loss, amortized net gain or loss. But here they said there is no net loss from LOCI to be amortized. Then the last piece in pension expense is the expected return on plan assets. Here they told us expected long-term rate of return is 10%. So 10% multiplied by beginning plan assets 80, that is $8 million. So the pension expense is increased by $20 million of service costs plus $12 million of interest costs and decreased by expected return on plan asset $8 million. 20 plus 12, that is 32 minus 8. So the answer is $24 million. Requirement 2 asks us to journalize first pension expense. So debit pension expense, and then the number will be the last plug-in. Debit plan assets by the expected return. Expected return as we calculated before, 10%. 10% multiplied by beginning balance of plan assets 80, so that is $8 million. Credit PBO, projected benefit obligation. And this will be the sum of service cost plus interest cost, so $32 million. And the last plug-in will be pension expense. Since there are no amortized prior service costs nor amortized net gain or loss. So the last plug-in will be 32 minus 8, 24. The next entry is to record the funding of plan assets. So when the company contributes, means funding, contributes to the plan by $20 million, the contribution increases plan assets. And the company pays cash, so credit cash, for the amount they contributed, $20 million. The third entry says payments of benefits. So when the employer pays benefits paid $9 million to retirees, it decreases PBO as well as plan assets, $9 million. So we decrease liability on the debit side, so we debit PBO, and we decrease assets on the credit side, so we credit plan assets by $9 million.